A financial statement is the summary of financial activities for an organization. That's what a financial statement is. So I'm just going to be using layman's languages mostly throughout this training because I know that there's a mix of people. So a financial statement shows the financial result of every organization. So every organization needs a financial statement because we need to know whether we have made profits, we have made losses, how much assets do we have, who are the people that we are owing, how much is my own money. So a financial statement is a statement that shows all of that for an organization. So today we're going to be looking at how do we prepare these financial statements. So I know that many of us are accountants, right? And we would have been hearing things like management accounts, financial reports. So let me quickly distinguish between these two very similar but distinct terms. So the two items are similar because they are showing the report of a company. They are showing whether the company has profits, losses, the assets of the company, the liabilities of the company, and things like that. You know, that's what these two statements shows it. But the difference between a management account and a financial report is that management accounts are mostly for internal use. Management accounts are mostly for internal use. So you don't publish a management account. And because management account is for internal use, they are usually come in with some additional internal information. So if I want to prepare the management account of maybe Dangote now, in addition to some of the things that we are going to talk about today, you might be seeing some dashboard on the management account that maybe shows, okay, last year our revenue was this year it has this, by how many percent has it grown? Some management accounts will compare, you know, budgeted amount with actual amount and things like that. So a management account typically is prepared specifically for what management needs. The management needs to take decision and sometimes they need some certain information, right? So in addition to the basic requirement of a financial statement, a management account comes with additional, reports that helps management in the activities or whatever activities that they are doing. So you'll be saying things like some dashboards, all those Excel dashboards that will just show how our profit has moved over 5 years, how our sales have increased over 5 years. So that's the management account. On the other hand, a financial report or a financial statement is prepared in terms with external regulations. It's prepared in terms with external regulations. So you are preparing it in line with a certifiable accounting standard, right? So there are things that must be included in a financial report. You can remove a lot of things in your management account because it's for internal use, you don't need it. But when you are transferring a management account to a financial report, there are certain requirements that must be included in the financial report. So the reason that this is done is for the purpose of comparison. So if I take the financial statement of Mr. A, or let's say company A, and I take the financial statement of company B, I will be able to compare the both of them because they have been prepared on similar basis. But if I take the management account of company A, I won't be able to compare it with company B because you know that the management need for company A is different from that of company B. So please, let's note that management account is for internal purpose. Financial reports is for both internal and external purpose. And financial reports is usually more detailed than a management account. Now, this trading is going to be in between management accounts and financial reports. So when we are preparing a financial statement, when we hear prepare financial statements, there are minimum requirements that must be included in your financial statement. These 5 things that you can see on your screen are the 5 things that must be included in a financial statement. 1, the statement of profit or loss. 2 is the statement of financial position. 3 is the statement of cash flows. 4 is the statement of changes in equity, and the 5th one is the notes to the account. All right. So if you're just hearing some of these things for the first time, remember we're assuming some bit of accounting knowledge, right, for this training. But if you're just hearing these things for the first time, statement of profit or loss shows whether a company has made profits in the year or losses. So we are going to be comparing the revenue or the income of the business against the expenses. So if income is more than expenses, it means that there's profit, while if expenses is more than income, it's losses. On the other hand, the statement of financial position shows um, the assets and liabilities of the business, right? What are my assets? What are the things that I own? And who are the people I am owing? Those are my liabilities. And then it shows the equity, also the contribution that the owner has put into the business. Then we're also going to look at the statement of cash flows, right? The statement of cash flows is how cash has come in and how cash has gone out of the organization. Who did I give money to? Who did I collect money from? Then the statement of changes in equity. So what this statement of changes in equity shows is
What is there with
the
you?
owner of the business has put money into the business. That amount he puts in simple terms is equity. I've put 500 into the business. In a particular year, if I make a profit of 200, it means that the total amount I will now have is 500 that I put before plus the 200 profit I have made. Then I will now also consider any dividend that I've removed from myself. I mean, I paid dividend to shareholders. So I'm basically looking at how the owner's money in the business has changed from one period to the other. And then there's notes to the account. So what this notes to the account does is that it provides explanation on the things that are included in these four statements. So I just did a sample of a statement of profit or loss just for you to see. So these are the revenue, this is the income of the business. These are the expenses of the business, cost of sales. This is just a sample of a a profit or loss account. Then there's also what we call other comprehensive income. So when you make gains in your financials in a particular year that is not relating to your operating activities, right? We call those ones comprehensive income. So sometimes your profit or loss statement will not just be profit or loss. You need to have other comprehensive income. So things that the other comprehensive income is if the value of your land increases, if you decide to revalue the value of your land or building. Now that is a gain to you as a person, but it's not part of your operations. So that is an other comprehensive income. Right. So this is just a sample. Then also a sample of a financial position which shows your assets and your liabilities. So these assets are the resources that are owned by the company, right? Then the liabilities are the people I'm owing as a business. Then the rest is my equity. So you see equity, this is the what the owner owns in the business. Then the statement of changes in equity. So this statement of changes in equity shows how the owner's money, right, typically has changed over time. So most of the popular things that you will see is the my retained earnings means my accumulated profits. So that in this example, as at 2021, I have accumulated profit of this amount. Then in that particular year, I made additional profits of 1.7 billion rather, and then I paid dividend, right? So you just look at the things that affect the owner's equity. And then the statement of cash flows. So don't mind all these examples. These examples, I just had to use a very detailed um, sample so that you can see the extent to which it could be. For your typical organization, it may not be this much. It may just be more concise because they will not have this level of activity, right? But for an organization that has so much activity, it could be this robust. So now we are going to move into the practical session, right? And the first thing we will need to note is that when we are preparing a financial statement, when we are preparing a financial statement, the starting point is the trial balance. The starting point to prepare any financial statement is the trial balance. Once anybody says, I want to prepare a financial statement, the first thing you're going to ask them is that give me your trial balance. So your trial balance is the starting point to prepare any financial statement. Now, someone might be asking, what is a trial balance? Again, I'm saying we have assumed some bit of knowledge, right? Um, so a trial balance is a list of all the balances in the organization. So list of assets, liabilities, income, expenses, a list that shows everything in the organization. That is your trial balance. So from your trial balance, you move to the notes, and from the notes to the account, you move to the primary financial statement. This thing, I'm going to demonstrate it for you in the Excel session when we open the Excel. So the first thing is you ask for trial balance. From trial balance, you move to the notes to the account, and then you move to the primary statement. So what are these primary statements? These primary statements are these three things: statement of profit or loss, statement of financial position, and statement of cash flow. Those are the what we call primary statements. All right. So please take note of this when we go into the primary session, practical session. Then before we also go into this practical session, some things that you need to check before you start preparing your financial statement is that one, ensure that your trial balance is balanced. Ensure that your trial balance is balanced. Before, when you get any trial balance, remember that the starting point to prepare a financial statement is your trial balance. So once anybody gives you a trial balance, or you even develop the trial balance yourself, make sure that it is balanced. It means that the debit side is the same as the credit side. That means if you do the difference between debit and credit, it will give you zero. So ensure that it is zero. If it's not zero, return that financial statement to whoever sent it to you and say, oh, we cannot work with this. Then second thing is that if you are doing a financial statement that is not the first year, so the thing is, ensure that you reconcile the current year trial balance with the prior year signed financial statement. So we might not be talking so much about this, but if, for example, retained earnings, right? Retained earnings in the last year, 2023, you prepare 2023 accounts, your retained earnings in the last year was 5 million. Then you are preparing the account for 2024. You now see that opening retained earnings in your trial balance is 8 million. It means that there is an issue, because I expect that whatever I closed with in the previous year is what I'm going to open it in this current year, right? So make sure you do that check. So there are some items that whatever you close with must be what you are opening with in the subsequent year. Then you need to cast your financial statement. I'll talk about this third point and this fourth point in the Excel computation when we go to the Excel, right? So we can save some time. Then ensure that all your text are in the correct flow for presentation. Very important. Ensure that all the worksheets are linked properly, right? And avoid add coding of numbers in your financial statement. You don't add code any number. So when we say add coding, I know that 2 times 2 is equal to 4. So whenever I do 2 times 2, I'm not going to just by myself write 4. I will make sure that I put a formula that shows that 2 times 2 is equal to 4. Again, I'll practicalize this in the Excel session, right? But make sure that nothing is coded in your primary statement or in your notes to the account. And ensure all merge columns are stay within the default page break because of presentation. We'll see that a little bit more in the practical session. So some Excel shortcuts that would help us. I will demonstrate all of these guys. For these things will save you so much time when you are preparing your FS. So you need to know some of these functions to help you to save you so much time. All right. Now I'm going to jump this to the end. I'm going to talk about this common pitfalls in financial statement preparation at the end of the training. So right now, we're going to go straight to the practical session. And once we prepare a financial statement, I remember that the first thing that you need to prepare your financial statement is your what? Is your trial balance. Are we together?
Yes, we are
Yes,
together.
Okay.
we are.
All right. So I know that we have the kind of a mix here, right? And there are some people that are
Yes, we are
saying,
together.
"Oh, I don't, my company, we don't even do trial balance, right? My company does not do trial balance. So how do I prepare financial statements for my company? The only thing I have is bank statements. So I'm going to quickly address cheap situations where you don't have a trial balance and what you have is just bank statements. So what you need to do is that you need to convert your bank statement to a trial balance. So it's a situation where you want to pay a financial statement for a company and the only thing they have is just a bank statement. You need to convert that bank statement to a trial balance. And let me warn you, that is not a good way to prepare financial statements, even though you see it's happening, right? That is a very bad way to prepare a financial statement. But again, you need to also face reality. So if you have been paying a financial statement for bank statements, you're not doing well, though. But we also need to look at that. So if you have a bank statement, how do you convert the bank statement to a trial balance? So I'm sharing my screen now. Let me know once you can see my screen.
You can see it.
Okay, let me increase it a little bit.
Can see it.
Now, thank you for that. So I want to prepare my financial statement from a bank statement. I remember that I said that it's not a bank statement I need to prepare my financial statements. What I need is actually a trial balance. So what I'm going to do is that I'm going to look for a way to convert my bank statement to a trial balance. So how do I do this? I'm going to collect my bank statement from the bank. So I have a bank statement here. You see, this is typically the way you see your bank statement. This is a sample bank statement from Bandana Limited. All right. So I'm just going to assume, this is for a particular year, right? So what we're going to do now is we're going to analyze each and every component of the bank statement. And when we are analyzing, we are going to need a guide. So for your own organization, you create a chart of account that serves as a guide, right? So what's this chart of account going to do for you is we are going to we're analyzing inflows and we're analyzing outflows because a bank statement is typically made up of those two things, inflows and outflows. So from your own understanding of the company, what are the typical inflows into the company? And what are the typical outflows? What are your major outflows of the company? So in this case, I have analyzed that, okay, for this company, their major inflows are fees for registration and fees for lesson because
Let's
this
see.
example we are doing it for a company that maybe does tuition for students. So the major fees is either students are paying registration fee or they are paying lesson fee, right? Then there could be some other things that will just come in that I will just call other income. Then there are some things that it could be maybe I paid money and it was reversed, right? call it fair. So based on your own understanding of the company, you can make it anyhow you like. Then we have another source of income that we call care income. Then directors current account. Maybe the directors are taking money or sending money into the company. Different directors sending money into the company. So my inflows will mostly be around this for that bank, right? My outflows out of the bank, which is mostly me spending money, right? Could be field payments, could be I'm paying tutors for this particular company, could be bank charges, could be payment for account services, employee benefits. So I will analyze my company. Now, this same chart of accounts is not going to work for everybody. It's going to work for you based on your understanding of the company. So I will have a bank statement. I want to convert my bank statement to a trial balance. So I want to analyze that bank statement, but I'm going to analyze them based on major headings. So once you have been able to do this, right, you have been able to show your chart of account. Your chart of account does not need to be perfect at start. When you are analyzing your bank statement and you feel the need to introduce additional items into your chart of account, you just be adding it. So maybe you did not make provision for transport before and you are seeing a lot of transport, you say, okay, let me create a line for transport and you add it here, right? So because of time, I already did the analysis of this bank statement. So what I will do is that this is my bank statement from year to year. Is my bank statement. It's still the same GTB bank. I have now analyzed it, right? So I'm analyzing them under income and I'm analyzing them under expenses. So see the way I just spread it out. And what is informing my spread out? What is informing my spread out is my chart of account, right? That I've done, okay, that if money is coming in, it's either a registration fee, lesson fee, other income, or directors are bringing in money, or if it's even a failed payment, right? Then if money is going out, it could be either tutor fee, bank charges, accounting services, and the likes. So it could be any of those things, right? So what I will do now is I will now start picking each transaction. It's a lot of work. I'll start picking each transaction and I'll map it appropriately. So here I can see that, oh, I received 30,000. The first thing I will do to map it is that I will check the description in the bank. And I do not know what the description is. What I will do is, if it's my company, I will know what this person paid for. But if it's not my company, I will need to go and ask that this 30,000 came in. I don't understand what this 30,000 is from the description that I've looked at. What is this 30,000 for? They'll say, oh, 30,000 is for lesson fee. So you see, I'll put it under what? Under lesson fee. So I can see that like two people have their hands raised. So let me just quickly take them before I go too far. If you have your hand raised and it's a mistake, please put your hands down. Ugochi, your hands are raised. Do you have a question?
Yes, I do. So, as regards the GTB, the analysis that you are making. So, I want to ask if the analysis, like both the income and the expenditure side, if it's linked to the chart of accounts or is separate on its own.
Well, for me, I will not link it, right? Because I want to make it flexible. But once I am done, like I'm done analyzing, I've seen all the possible ways money can come in or go out, then I can link it. Do you get it? Because if I link it now and I'm adding some, it might be a little bit messy for now, right? But once I'm done doing that, then I will just link it. Okay. Kelvin, do you have a question? Deborah, do you have a question? So we can go ahead. Okay, so I'll take that as no question. Now, you go to the next transaction. You see that this thing is plenty work. 30,000. You go to the this transaction description, right? For me, I can see that it is lesson fee, right? So I'll put it on a lesson fee. If I am not sure, I would ask. So I will now be doing that for each and every item in my financial statement. Each and every item in my financial statement. So
Sorry,
this is
Toby.
You're not seeing your screen, sir.
Yes. I can't see your screen.
that
I think you might need to reshare. Some can't see your screen. A lot of questions and on the chat box as well.
We can see it now.
Okay, it's back, right? Okay.
okay. All right. So the next thing is that I'll go through all the lines, right? So this is 9,000. I look at it. It is, I don't know. So I would just ask. They say, oh, it's registration fee. Map it under registration fee. So you are going to do that for each and every item in your bank statement, right? So this is a payment, right? This is a payment, and from what I can say that it is a failed payment. So I'll put it under failed payment. Then I have this amount, 12,000. This is I can't tell from what the transaction is. So I'll go and ask. They'll tell it to me, okay, it's an amount that was paid to a tutor, right? So
Sorry,
not going to
please,
waste
I can't
time.
see your screen. Oh. I can't see your screen.
Okay, is anyone also having that challenge of not seeing my screen?
Yes, good evening. I can see
Yeah, I can see your screen.
Okay, so let me
the
just
screen.
stop.
I think it's on the setting.
I can
I
actually
think
see the screen. Maybe those that can't see it should go out and log in again.
I tried doing that. No, it did not work.
It's showing enough.
Maybe the network connectivity.
Okay, it's probably network.
Babe, you don't need to stress yourself. Babe.
All right, so I believe we should
Stress
be
yourself.
now. Let's please mute. Please.
No. I will not be a fan or an advisor of you to do something that will not be convenient for you. No.
Okay. So now going forward, I can see that there's a payment of 100,000. Is a failed payment, so I'll classify it under failed payment. Then 50. This one is bank charges. So you see that. Let me freeze this pin so that you don't have to. So you see 50 naira bank charges, 12,000 payments. So that is what you are going to do for every item in the bank. Now, if you are the accountant of the company, it's very easy for you to know that, okay, this money is what it relates to. This is what it relates to. But if you're not the accountant, you have to actually sit down with the people that actually knows what this transaction is and start mapping. If you don't know what it is, please don't go ahead and map it anyhow, because you'll be reporting an incorrect amount. So you need to actually know what each of the balances have, right? So,
Okay, sir.
So once you are done with the analysis, so imagine you have like 30,000 lines. You are going to sit down with 30,000 lines to do all of this. Now, someone might say, okay, what is the alternative to this approach? The alternative to this approach is to use an accounting software. But we're not really going to talk about that now. We're just going to say, okay, let's still look at the bank statement analysis. So if you have 100 banks and you want to go the approach of converting a bank statement to a trial balance, you do this analysis for each of the banks that you have. So in this place, this is another bank, right? But this bank, there's no so much transactions there. So this is the bank statement collected. Then I'll also analyze it based on my chart of account. But since I don't really have much, I only put lesson fee and registration fee here. So inflows into this account is either lesson fee or registration fee. And outflows into the account, I'll also recognize what the outflows is, whether it's an expense or bank charges or whatever it is that the money is going out for. So if you have so many banks, you do this same thing for all the banks that you have. So at the end of the day, you not create a new tab. I believe we are all in sync with the bank statement analysis.
Yes, sir.
Okay. So now this part is very important. This is the part where we are converting our bank statement to OCB. After you have analyzed it, you will now copy everything. See, I've copied this header. Sorry, before you do that, at the end of the day, you need to find your totals. You need to sum up everything. So I believe this is a professional class, but we know how to sum. There are different ways to sum. You can use articles and all of those things, but we're not talking about Excel formulas in this place. We'll just find a way to sum. But in case you don't know how to sum, just press Alt and equal to on your own laptop. If I press Alt and equal to, it will sum up everything that I have on this row. Right? Alt and equal to sum that up. Or too many other different ways to sum, any way that is for you. So once you have summed it, what this means is that in the particular year, the total registration fee that I have gotten is 104,000. Total lesson fee that I have received is 7 million. Other income that I have made, maybe other income is income that is not lesson fee or registration fee. Then from the payment part, the total payment I have made is total fee I have paid, right? Is 8 million. Bank charges 34,000. Account services 165. Like that. So now I will now go ahead. See this my headers that I got from my chart of account. I'll copy it. I will now come and paste it on a new sheet. I'll paste it on a new sheet. But see the way it came out. I don't want it to be like this. I want it to be, this is vertical, horizontal, right? I don't want it to be horizontal. I want it to be vertical. So what I will do is that when I'm pasting it, I will not paste it as vertical. Sorry, as horizontal. I will come to this thing, transpose. So how do I get this tab? There are different ways, but one of the ways you can do is to do Control V. You press Control plus Alt plus V to give you this tab. So you want to paste them as values, but you don't want it to be horizontal. You want it to be vertical, so you transpose it. So you see that it has come out this way, right? So
Control Z plus what, sir?
Control Alt V at the same time.
Okay, sir.
All right. So once you have copied that, you also copy your total column. You copy your totals. So if I copy my totals, I will now come to the side and do the same thing. I'll paste it, Control V. I'll paste as values and also do what? I'll also transpose. Do a little bit of formatting just to make it look okay. So there are two ways. There are some people that are familiar with a way of preparing the entries. They usually put incomes. You know, all these guys are income. I'll put it on credit side. I'll put it on this side. So I'll call this side debit side. This is my trial balance now. I'll call it debit side. I'll call this credit side. Probably put the currency that I am working with. So these are my 2 lines that I'm not using. I'll remove it. So once I've done this, this is GT Bank analysis, Abi. This is GT Bank. You know that it's possible that you have so many banks. GTB analysis. So once you have done this, you will now find your total. Remember, to find total, you just do alt equal to. But just for consistency's sake, I want to drag my own a little bit upwards. So this is debit side, this is credit side. So these two are amount balance, please. There's nothing there, so I can take them out of my trial balance. So this thing that I already have like this, it is now my trial balance. So this is how you convert a bank statement to a trial balance. Now, if you have multiple banks, you have to come and analyze each one of them and put them side by side. I'm not really going to do that now. If you have multiple banks, so from your GT analysis, you go to your maybe you have a Zenith Bank account that you have done the same thing for. You have multiple banks, then you now have a total. You have a place for total. So in your place for total, you are going to add them together. So you are going to add both GTB plus Zenith, right? The same thing for the tutor fee. You do the same. Some people, if you are not speaking, please mute. Okay. So this total now, this is going to be your final trial balance, because you cannot use the analysis of just one bank to be your trial balance. You have to use analysis of all the banks put together to be your trial balance. But for the purpose of this illustration, I'm only going to use that of GT Bank, right? But this is a very simple case. There are some cases where the trial balance could be more complex. That's what we are going to next, right? So we're going to see a more complex trial balance analysis. So now look at this FS, this trial balance. Who can tell me what the issue is in this trial balance?
It's not balanced. The debit and the credit is not balanced yet.
Thank you very much. So by the time I look at my totals for my debit side, and I look at my totals from my credit side, one of the first things that you need to do is to make sure that your debit side must be equal to your credit side. So it means that I need to go and find out what is making this my account not to be the same. I need to go and, because by the time you do the difference of the debit and credit, it must give you 0, right? So I'm not going to take that time. I intentionally did this way, right? So now what you will be required to do is you now maybe something that you not map a particular balance. So that's another work that you now do. So
what about your opening balance? Your opening balance.
Someone has already caught one of them. Yes, so that's one of the things that was not mapped here. So this opening capital now is the directors of the company, the owners of the company has brought in money to the business. So there's no place where I recognize opening capital in my chart of account for inflows. So I have to put equity or capital to show that, okay, in inflow, money came in and this money is for capital. So I'll put it there. I'll link it equal to this guy. So someone has found one of the problem. The difference is 191, but this one is 118. It means that there's another problem that I'll leave it to go and resolve. But this is how we convert a bank statement to a trial balance, right? Any issues? I believe there's no issue, but if you have issues, you can raise your hand. Because now we want to move to a more advanced situation where you want to pay a financial statement for a company that actually prepares or keeps their proper record. Okay, so questions. You can take your shoot.
Sorry, please. Can you come again with the key to press when you...
The key to press.
Excuse me, sir. Can I talk? To transpose.
To
You said
transpose
something
is
like control V or something.
Alt
I
and V.
didn't get that part. To transpose, can you
Control
convert that or
plus
don't have to?
Alt plus V. By the time you press all of these three together, but you have to have copied something first, though. It will bring it out for you. Fill out this page for you. Then you see
Okay, yes,
the
I
place
get.
where you
Thank you, sir.
Hello, sir.
can transpose.
Can I ask a question, sir? Good evening.
Yes, Mr.
Okay, sir. I was wondering two questions. First off is I thought that we could maybe do a check on our bank analysis to zeroize all references and analysis. I mean, maybe if we can zeroize all those analysis, we do a first check there. And then secondly, I thought I heard you mention that we should not add code figures. So I was thinking maybe we would link figures from the analysis to the trial balance so we can alt back to them. It's just something I thought of.
Okay. I can see that you are actually thinking ahead, right? That is actually very good. So yes, you are right on the two instances. So the plan is that I don't want to solve the problem of this this particular bank statement analysis. I don't want to solve the problems, right? The plan is for me to give it to you to solve the problem. So that which is going to be a form of you actually practicing, this. And that's why I'm actually stopping here. I'm not preparing the financial statement of this bank statement analysis. I'll give it to you to first of all find what the problem is, for each one. Why is it not balanced? So when you are looking for it, you go into your bank statement analysis and then find whatever issue there is. Then the second one, in terms of analyzing your bank, was I was going to talk about that in my second example. So what that is going to do for you is that, see, in this instance, now let's say that this 37,000, right? This 37,000 was not supposed to be in lesson fee. Let's say it was probably meant to be in registration fee. You know what this will cause is that your balance at the end will change, right? But if you don't link it, it means that every time you change a balance, you need to go and be copying again, right? So that's one of the problems of this this approach. So there's an alternative approach of the formula that you can use to actually just bring it in directly, which I'll talk about tomorrow. Tomorrow in my subsequent example. Again, one of the ways you can do it is to say equal to this. Can do equal to this, and that's not an efficient approach to doing that. So we're going to talk about how to link in my subsequent example. Is that fine? Okay.
Hello, sir.
So yes, go ahead, please.
Okay, sir, I want to ask, please, can we get the practical Excel file after the class?
Yes, you would.
All right, thank you, sir.